and avoid unnecessary fees. Occupy. If you are a foreign investor eyeing for the Australian property market, it's crucial to understand the vacancy fee, a charge that can significantly impact your investment return. In today's video, we'll break down what vacancy fee is, how it is calculated, and what you need to do to stay compliant, especially if you're investing in New South Wales. The vacancy fee is an annual charge imposed to foreign investors, owners of residential property in Australia. It is designed to encourage the use of housing stock and applies if your property is not occupied for at least 183 days per year, which is approximately 6 months in 12-month period. This fee was introduced to ensure that foreign-owned properties contribute to the housing supply and they are not left vacant. If you are a foreign person that have purchased a property since the 9th of May 2017, you are likely subject to the vacancy fee. This includes individuals, corporations, and trusts that meet the definition of a foreign person under the Foreign Acquisition and Takeovers Act. Even if you own multiple properties, each property is assessed separately for the vacancy fee. The vacancy fee is generally equivalent to the initial Foreign Investment Review Board application fee you paid when you purchased the property. As of 9th of April 2024, the Australian government has doubled the vacancy fees for all the foreign-owned dwellings purchased since the 9th of May 2017. For example, if your FIRB application fee was $5,000, your annual vacancy fee will be now $10,000, so double the FIRB fee. Each year, you must lodge a vacancy fee return with the Australian Taxation Office, ATO, within 30 days after the end of your property vacancy year. This return declares whether your property was occupied or rented out for at least 183 days. Failure to lodge this return on time can result in penalties, including the imposition of the vacancy fee, regardless the property's occupancy status. In New South Wales, foreign property owners are also subject to additional charge. Number one is surcharge purchaser duty, an extra duty of 9% on the dutiable value of residential property purchases. Number two, surcharge land tax, an annual tax of 4% on the taxable value of the residential land owned as of the 31st of December each year. These surcharges are separate from the vacancy fee rate and are administered from the Revenue New South Wales. To ensure compliance and avoid unnecessary fees, occupy or rent out your property for at least 183 days each year. Lodge your vacancy fee return with the ATO on time. Keep thorough records of occupancy, including lease agreements and utility bills. Consult with professionals. Engage with property managers or legal advisors familiar with Australian law. Understanding and complying with the vacancy fee requirements is essential for foreign investors in Australia. By staying informed and proactive, you can avoid hefty penalties and make most of your investment. Watch our video about surcharge purchaser duty for more insight. If you have any questions or topics you would like us to cover, leave a comment below. I'll see you in the next video, and until then, keep rising.